There are, of course, plenty of stocks out there, but that doesn't necessarily mean that most of them are any good. Today, we're going to be looking at 3 growth stocks specifically, all in a little bit different categories so we can get some variety that I think are pretty good stocks, great companies, and they've performed better than the S&P 500 over the last 5+ years. Like I said, Amazon is the first one we are looking into. It is only up 136% over the last 5 years, which has outperformed the S&P 500, which is up about 85%. But that's not crazy. It looks better when you zoom out. They had a huge run up going right before where we would be 5 years from now, 5 years backwards. And if you look all the way at the beginning of 2015, the stock was somewhere around 19. So you've done very, 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 very well. If any stock you has is giving back multiples like that, it's a very great company. So this is a company that has dramatically outperformed the S&P 500 over the last 5 years, over the last 10 years. And it wouldn't be that surprising that the PE ratio is slightly above that. You're at about 48, which compared to the S&P 500 at 30, yeah, you are paying a higher premium, but Amazon's one of the biggest, one of the largest companies in the world. They do hundreds of billions of dollars in revenue. They only bring in so much profit because a lot of that is retail-ish model, and there's not a whole lot of margin there, but still Amazon is a great company. They're in lots of different spaces like Amazon Web Services and things like that. AWS is a huge money profit driver for them. Honestly, it really is. 35.2 is the forward PE, so yeah, you're a bit more expensive there as well. S&P 500 forward PE is about 23, but still, this is a company that's one of the best in the world, and I wouldn't mind betting on it at all. And it's performed well too. The next one we're looking at is KKR and Company. It's a little bit more complicated to explain what they do. It's not a huge company you deal with every day like Amazon, but they basically are an investment company. They invest in other companies, help be a part of that process, benefit off of them making money. So it's kind of similar to Maine, if you've heard of that stock. It's a bit smaller. They are also primarily high yield dividend instead of growth. But KKR is one of the better performers, even considering outside of tech as well. It's hard to get companies that perform at these multiples outside of tech, or even just in general. Some of the tech companies don't as well. Many of them don't. 47 is the PE here, so you're right around Amazon. However, this has been a better performance over the last 5 years. If we zoom out, decade ago, 2015, you're at about 16, still done very well. IPO'd around 9 or so. So this is a company that's just blown it out of the water. And honestly, you probably don't expect it to keep up this, but even if you get half of what they've performed over the last 5 years, you are probably very, very happy with that. On the valuation, it actually looks even better. We can see the forward PE is 24, the valuation metrics, because PE is meh, right? 46. Forward PE, you're almost exactly where the S&P 500 forward PE is, right? That's at 23, you're at 24. So really, if we're looking at the future, everyone hits their metrics, which of course does not always happen, but assume it does. KKR probably is a company that has a track record of doing that. You're valued about where the S&P 500 is in a year if everything stays flat. So, and for a company, if you're valued at the same and you've outperformed so dramatically, that's a very good position to be in, and you would expect the share price to continue to go up. But I don't know, they're a great situation right there. The last one we're looking at, I'm assuming most people have not heard of this, Sterling Infrastructure. They're a smaller company with about $5 billion market cap. Usually once you start getting under $5 billion, things get more complicated. A lot smaller companies are harder to value, even if they're profitable, which Sterling Infrastructure is. However, you are above that $5 billion mark. It's kind of arbitrary. I've covered smaller stocks on this channel, but usually under 3, I don't think I've ever covered. So PE is 30. That's good. 5 years, 1,154%. That is pretty phenomenal. And there's a reason some people bet on smaller stocks, is there's a lot more room to grow. Going from 5 trillion to 25 trillion is much harder than from 5 billion to 25 billion, or 500 million to 2.5 billion, something like that. Sterling Infrastructure has done very, 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 very well. If you zoom out, it only gets better. They've been around forever, but as basically a stock that was, it was there, but it was we're talking about in the $100 million market cap. It's really hard to value a company like that. And no one really pays attention. Now this is a company, okay, let's start paying attention to these guys. They're up 1,154% over the last 5 years. That is very, very, very good. PE is 30. Take a little bit look at forward PE. Yeah, 27. So you're paying for a company that's up 1,000% over the last 5 years. About a little a little over the S&P 500 for PE, 27 compared to 23. Now, you have to factor in a few things. What they do specifically, I assume most of you do not know, they do infrastructure. They build warehouses, areas for data centers specifically. That's very good. And so it's not the sexiest place. Like, it's more construction. Okay, we make this stuff for you. But if they're specialized enough, there's the demand there for it. Now, it's just harder to turn a profit on that. And you can see that their market cap's only 5.4 billion. I think they have somewhere close to, they have a lot of employees and things like that. So their margin is much smaller than something like a tech company. So there's always going to be some sort of cap, some sort of ceiling, although it's probably not that crazy. You probably still have room to grow here if you're a company that's going to continue to be successful. And it seems like they have been. So, and honestly, I don't want to speak too much more on them because it's kind of complicated and they're a smaller company. And honestly, I'm not a complete expert on them. At least don't know as much as a company like Amazon. But when you start doing numbers like this with PEs like this, people start noticing, and we are here noticing. So, but anyways, I appreciate all of you for watching this video. If you enjoyed, I'd appreciate if you liked or subscribe. I do daily stock content on this channel, everything from these covering 3 stocks to going deeper into individual stocks. But anyways, I appreciate you all for watching, and I'll catch you next time.